Hey traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar. And good day to you. Looks like markets are finally starting to move a little bit. It's been uh, pretty quiet for the most part. Tuesday, obviously, we had the nice yen move, but we're getting some whiplash here back and forth. Really, I think probably, at least the euro, probably just part of a consolidation before we go higher. But what I want to start with today were the longer term updates that I did over the weekend. So a few things here. The main chart really to pay attention to, I think, is this one. Um, it's one that we've had on or a chart we've been kind of following, for a very long time. And quite simply, you've got great reference points here. I mean, the midline. Okay, even though it's downward sloping, the break above that is viewed in a very bullish manner. All right, and pretty obvious why. We've failed at that level on every rally from the March 2015 low. Okay, and a lot of times it was very precise. Really, the only time you even traded above it at all was in May of 2016. And at that point, we traded above it a good deal, but we actually closed below it on the week, made that weekly key reversal. So, it's a big deal. Now, that doesn't mean that you can't go back and test it as support. It'd be quite a drop from here if that were to happen. But if it did happen, it would just be viewed as a really great opportunity. I don't think that's going to happen just because when I look at the say the 4-hour chart or something, right? We've been talking about the triangle. Now we'll get to that. But on this chart and just based on your slope analysis, if you will, just based strictly on that, the next logical point to go on this chart is the 25 line. The 25 line and the 75 line are in magenta. Okay. And the 75 line was really good support. It's where we're coming from. Okay, so when that happens, typically the next point or the next level you go to is the 25 line. All right, and that is up, a good deal higher, obviously. It's actually up near 1850, 1875, which is interesting because that's exactly what the 2010 low is. So, the point of doing these longer term updates here over the weekend is really to provide context for, where, I think the market is headed, and it tells me that I kind of want to be generally probably a dollar bear up until that point, up until the euro reaches this level, right? And this all fits the July stuff going into July. There's a lot of stuff that's popping up in July as far as possible, turns or exhaustion. The main one with euro, of course, is the analog, which, even to me, this has been, it's been pretty crazy, really. The fact that this has actually worked so extremely well. It's continued to follow it. I mean, we identified this thing back in October, right? Back in October, I noticed that the mirror image of 2004 euro is following the mirror image of 2004, right? So you copy that, you take the mirror image, and it's literally given you a map of euro. It's just wild, wild stuff. So, yeah, sure, maybe you get, this is not, say, this is a weekly chart. So can you get pullbacks? Jamie here. Let's see. This is Will Allen. How are you, my friend? Welcome, welcome. He says, I'm new here, so apologies on the silly questions. No question is silly, my friend. You ask whatever you please. And he says, what's the analog? Right. So just going through that, the analog is the mirror image of 2004. All right. In other words, when you have highs back in the 2004 period, you have lows in the 2016 moving forward period. So in 2004, we basically opened on the high. 2016, we opened on the low. We rallied until April, May. In this case, we declined until April, and then we had a big move higher. Okay, topped in December, a big move lower, bottomed in December. Now we did make one another low in January, of course, but then we traced out a 5-wave rally, right? And you can see how this is the opposite of that. So this back here was a flat, right? A, B, C, 1, 2, 3, 4, 5, right? A, B, C, 1, 2, we're in 3, probably needs to go a little higher, pull back in 4, 5, right? So the next turn on this would be some point in July. So July equals basically July over here, okay, in 2005. And for those that are new, there may be some of you in here. If you go to the website, you can go to long-term charts, and you will see some explanations on this stuff, right? So back in March, one of the things that bugged me about the euro decline was that the move was in 3 waves. Okay, so that has me thinking flat. So this actually has huge implications, right? So what we're saying here is that if we get a 5-wave rally up into some point that lasts really most of this year, right? The next turning point would be July, but again, then a dip, and then you go higher, and then that completes a flat all the way from basically back in March of 2015. And then the euro would be at risk of falling down towards, basically like a lot lower, like, way, way lower, like 90s or 80s or whatever. That's way far ahead. We really don't need to worry about that right now. But, it's been following it. So, silly to dismiss it. Anywho, that's the deal with euro on the long-term stuff. And then obviously I want to look at DXY on long-term. I will get into daily stuff, 4-hour stuff. So, bear with me. But where might we go in DXY? We like to find the destination of the market. Where's the market's destination? And once it gets to that destination, then you can make a decision, right? Here's Euro CAD, by the way, which might be topping, or it might have topped as per yesterday's post. But DXY, so the monthly chart here, awfully helpful. DXY trend line back from the 2008, 2011 lows, same exact trend line on the slope as back in the 90s. That trend line was resistance here, support here. Basically, you have a confluence of levels. Sarab saying, can we look at gold, silver, copper? We will most certainly. Point being is, again, this is in the long-term charts, but I think we probably are headed for a test of this 94.40 region before you get any sort of a bounce. And that would probably fit pretty well with the dollar, or with euro, finding something of a top, a pullback, through after this month, so some point in July. And that is, that's pretty much it as far as DXY and euro are concerned. All right, you can see it very clearly here. Just 2 lines, channel, last May, nailed the low. Down here, it's down in the 94.50 region, which, intersects with lows from last August. last September. So really, I think that's where we're headed. Does that mean we go straight there? Of course not. Continue to follow the slope on the daily chart, okay? A little consolidation here and there. You would, if you get another bounce, this red line here is resistance. That's the spot. Okay, just as it was resistance and crosses a bunch of lows, it was support, and then it was resistance back on 530. Okay, all right. Let's move then into the 4-hour chart. 4-hour chart, euro. So really the same thing that we've been looking at. It's just kind of been, a little bit of a chop fest. These chop fests, by the way, are meant to separate people from their money in order to prepare the market for the next move. Markets, just like a bus or a boat or any mode of transportation, can't move if it's crowded, right? If it's too full, it has problems moving freely. And in this case, the market probably got a little too crowded, right, with longs. And that's what all this chop is supposed to do. It's supposed to free up the market, get rid of participants, get rid of weak hands. So what we want to do is try to be as patient as possible, and wait until we have a clear, time or signal or whatever to get on the long side. Again, there's two spots to watch really. One is like 1160 to 1180. 1180 is the median line. Again, if you don't know what this is, just draw a channel from back here, lows in back here, I guess that's 411 in April. April high on the 25th, and then the low here in May. And then you have yourself a channel. The midpoint of that channel, as you can see, cuts through some very important price levels. It was support last week. If we get back to it, it might be support again. Even the upper parallel here has been really good resistance. You can see how great these levels are. Okay, really, really following it very well. And then, of course, you can see this trend line here. If you can see that, just a simple form of resistance line, which was support. Okay, earlier very early in June, I guess, and that would be down a little bit lower, right? So it may be something where we get down to the 25 line, right? The 75 line has been in play at times, and if we get down to there, it's probably closer to really 1150. But you have a zone at which you need to watch for support. And if this is going to end up as a triangle, folks, we're going to get a little more like this. This will be A, B, would get a drop in C, a D, and E, right? And then we go higher. So we'd actually be, kind of messing around for a little while here. By no means is it going to be smooth sailing on the upside in the near term, at least for euro, if this triangle interpretation is correct. Now, the other option for euro, as we've talked about now for a week or so, is a flat, right? In a flat, the market would actually drop below 111.08, and we would get down to 110.80, which would actually put us close to that very long-term median line, right? I don't think that's really in the cards here because you've already had a flat. We had a flat in wave 2. And typically you don't get the exact same pattern, right, after you've had one, in the wave 2 position. So that is my working assumption, right? It's euro bullish, but you have to let the correction do its thing, do what it's going to do. Okay, cable took a 30 pip loss here today. Okay with that. I mean, 30 pips. The technical, I mean, the uptrend lines really, are really doing good work here as far as this blue line. That's why it's blue, right? Blue is bullish. But we are now at resistance. I thought that it would hold after failing for 2 days at 29.40. I thought it would hold that level and then turn down, test the blue line again. Whale says a couple of days ago, yeah, I mean, so things change every day. Okay, so Whale, you're new to this, to SB. Things change every day. Just because I have an idea or a trade in one day does not mean that it's going to be in the next day. In fact, it could be the exact opposite, right? Things change on a day-to-day basis, just like the markets do. Markets change every minute, every second. But yeah, so that's, the market had failed twice at 129.40. 129.40 is a lot of stuff. Daily reversal resistance is 129.40, right? That's the high move, the close for that day. There's also the 61.8. It's 129.40. Square root levels to 129.43. All right. So going into the election stuff tomorrow, if there were a knee-jerk reaction lower, I would look for support at 28.40, which again is just the blue line. Okay, support line within the structure. What election or no election or whatever does not change the technical call for another rally, a fifth wave rally, 1, 2, 3, okay, flat, for a move higher into the 135 region. Right, this is 1, 2, 3, looking for that fourth wave continuation at 34.70. Again, June is one of the best months of the year, historically, for the British pound. Okay, April and June are very good months for the pound, usually. So, that's something to keep in mind, I guess, as we have the elections, and who knows what kind of reaction we could get. But my focus on this would be buying into 28.40, or at least looking for support into 28.40 for cable. All right. Aussie dollar. Aussie dollar, I feel, is probably ready to finally accept take its turn. All right, one of the themes that we've talked about for a long time here in SB is the idea of passing the baton, right? And what that means is, a dollar bear market, there is, in a strong third wave, you'll have this, but it's not all the time. So just because the dollar is really topped, like back in March of 2015, right? But since that point, the dollar has not gone straight down against everything, right? Early on, you had, emerging market currencies did their thing. I mean, the euro was kind of the last to know. Japanese yen, kind of the last to know. I mean, the dollar yen actually topped back in 2015, but it put in its a secondary top. The low for Aussie is back in January 2016, but it hasn't done anything since then except consolidate, which is probably again a triangle B, A, B, C, D, E, finally ready to go, and we're probably going up to 85, 86. So 1,000 points higher is what I think is going on with the Australian dollar. Trading that or getting into that trade, put this on Twitter earlier, but we'd probably be following this structure for a while, I would think. And again, it's just May low, 523 high, and then the 6-1 low, or the I guess it's 6-2 low technically. You can see stalling up here at the 75 line. Would look for support first on the median line, so that would be near the former highs at 75.17, call it 75.20. That's your area for support, and would be looking then to higher levels. Okay, with a potential pausing point, of course, at 76.20. If the market were to trade out of this level, it would be extremely bullish, because you would be breaking through the top side of a structure, which is very bullish. But basically, you just kind of want to follow these levels, I think, with the blue median line and the levels around there. Kiwi, good lord, this thing. Teeny weeny pullbacks. When Kiwi decides that it's going to go somewhere, it certainly just kind of does it. Doesn't really waste a whole lot of time, does it? So actually, we did touch this long-term parallel today. You can see that's essentially the 25 line from the very long-term level, but there's two other levels to watch. One is the fib at 72.30. I don't really think that's going to do anything, so I'm getting rid of it. I've got a much better level up at 72.60, right? 72.60 is a square root level. It's also a parallel. So the parallel that I speak of, you can see the lows here, the lows here, kind of something here. I'm not too precise, but if Kiwi is going to see some sort of, even a minor top of sorts, I'd probably put it up in the 72.60 region. As far as support's concerned, you have the NFP level is 71.16. That was already support this week. I don't know if you get back there, but if you do, it's support. One of the things that when we get into the markets like this, kind of these the trending markets, that's what the alerts are for, right? So like right now, I actually have the alerts turned on for the Australian dollar. We haven't triggered a dip alert yet for the Aussie, but if we did, you would see it in the alerts. And when you get into these whipsaw the hell out of you when you're in a sideways market or a slow moving market. But when you're in a trend, they're very useful. And like, for example, early this year, remember in January when Aussie was in a solid uptrend, right? Earlier in the year, that's what the blue dots were, the dips, right? Dip. You can see the dips here. Each dip was into, before you went higher. So that's, kind of something that I would just kind of alert you to, is that I've turned on the alerts for the Australian dollar. You can see here with with Kiwi, these were on earlier. Some of you may have received like a couple weeks ago the alerts for Kiwi, but these were turned on. You can see each dip where the blue dots were, right? Dip, 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 dip. All righty then. So there we've gone through Aussie and Kiwi. Here's a little, I put a note here. I prefer buying weakness in Aussie at this point. Maybe I'm a little stubborn when it comes to this Aussie Kiwi deal, but the Aussie, I prefer buying the weakness in Aussie as per the Aussie Kiwi situation, which again, we had come into really big support last week. We reversed and we have followed through on that, right? So that's why I prefer to be, more focused, I guess, on the Australian dollar, excuse me, rather than the Kiwi dollar on the long side at this point. Again, just really big support down here, right? Very steep trend line, upward sloping trend line back to September of 2016, January of this year. So, kind of thinking higher, the daily reversal 2 days ago, and then following through on it. So, would prefer to focus on Aussie rather than just Kiwi at this point. But I've said that for a while, so we'll see if it actually works this time. All right, dollar yen, really beautiful. The way the slope is playing out. Again, almost just like ignoring all this, like the market traded out of that trend line back in May and quickly went into a top, quickly came back into it. We were lucky enough, fortunate enough to catch a good deal of this, and then definitely fortunate enough to get basically short right here. And somehow, this is markets for you, right? I put a target at 1106 because the gap, 109.06 because the gap is 109.03, and then we trade to 109.11 overnight, and doesn't fill the gap, stops right there. But I'm pretty bearish dollar yen. I feel like dollar yen's probably going to go a lot lower. Again, June seasonal is pretty bearish when it comes to dollar yen, and you've got a lot going on with gold here as well, as far as a big behavior change with the gold market, and we'll get to that in a little bit, but that should be a positive. We're really starting to see, it seems like starting to finally see a general dollar weakness theme take hold, with gold making a pretty important move on the long-term trend line. Bonds breaking out. The stock market's doing nothing, absolutely nothing. Everything moves except for the stock market. It just kind of stays at the highs. Eventually, that'll figure something out. It'll do something, but yeah, it's just sitting there. Let's look at a daily real quick. Dollar yen daily. Okay, so same chart, obviously, but this is, I think, the chart from yesterday. And, the 108.75 area, that's the median line. So we think that if you are going to see, something of a bounce, it would be near there. Mentioned also the closing low for the move is 108.43, and that could be a level too. So if I put that there, 108.43, remember the very long-term parallels here, that's down, in that region towards the lows. So it's not going to go without a fight, one would think, but levels to be aware of. So I don't like selling into something like this. Again, we're short, looking for the target, but I don't like selling into something like 108.43.75 because that's essentially where you could get a bounce. And I would be looking to sell more or resell if the target's hit up at that 110.10 area, which is just, this beautiful looking slope line, which was support throughout here from May 22nd until, I guess that was Monday. Yeah, right here. So we've broken it. We come back. It should be resistance again, or it should now be resistance, I should say, because it was support, and then you look lower again. So ultimately, where can you go here with dollar yen? Look, you've got the gap from the U.S. election is 106.62. It's obviously a level you want to pay attention to. If we were to go there, it might be something like, you can see you know, these levels here. It might be something where you get down there, it's around 619. So that would be basically 2 weeks. All right, period of consolidation maybe between here and then spill lower into this area, 106.60s. That would be a level to pay attention to and a time to pay attention to. And then finally, really, you've got 105, 19, 105.20, 105.40, and that would just be the lower channel. Right now, I'm not sure you get there, and here's why. Because once you trade out of a channel like this, like we have here, typically you trade back into it. You're looking for a higher low within the channel. So it doesn't mean you're going to go back down to the lower channel line. Typically be looking for it maybe over here. But again, that's looking at a bit further. Near term, all that really matters for us is the fact that this 110.10 area should be resistance now, because again, the parallel was such good support and it intersects with a nice horizontal line here at 110.10. Okay. All right. Dollar CAD and crude oil. Well, nothing's really changed for me as far as dollar CAD's concerned. Although that I guess could change soon. I mean, this is resistance. You know, this is if we fail to turn down here, I guess I'll have to change the idea that this is some sort of a fourth wave. Maybe it's a larger fourth wave. I don't know. You know, it was very clean looking. 1, 2, 1, 2, 3, 4, 5, 3, A, B, C. Did note yesterday that fourth waves are typically a little more tricky, right? So certainly this fits the bill as far as being tricky, but I am looking for a turn lower. I mean, there's a lot of reasons for it, right? You had the channel center line, which is in red here. It's really perfect resistance. And while we did hit this support here, wave count suggests lower. Obviously, the longer term chart, which you're all familiar with, which I don't really need to go over right now, right here, because we've looked at it a million times. But that is, right, you got that up here too. So there's that. You got the COT record as of just 2 weeks ago. Tons of reasons to be a dollar CAD bear. Okay. And the crude oil chart, so that inventory number came out today, and and crude oil has gotten absolutely killed. We've gone through the level I thought was going to provide support. So that was 46.46. That's daily reversal support. I guess you could watch for this line here, which connects these lows. There's another level to watch though. Hold on. Yeah, that's not really that clean. I guess just watch this level here. 45 and change. Yeah, I mean, this kind of throws a wrench in my super constructive bullish crude oil thought, right? And you have a real nice 5-wave rally here. what I thought was a 3 and on the 618 for 3 days, and then inventories come out and crude falls, over $2. So I mean, just kind of wait and see. But alrighty. Okay, gold, which we had talked about. That's pretty much the stuff that I wanted to go through, by the way. But gold, silver, copper, euro, pound are questions that we've had here so far. So let's look at those. Okay, so here's the gold chart. Remember the importance of the median line from the center channel. We've talked about this a lot. Median line, it's the exact opposite situation as what's happened, or as what happened back in 2013. Hit the median line, bounced, hit the median line, declined, go down to the median line, and that's the one that breaks. So yes, you can still allow for this to test, say, 1300 or so and even pause a little bit, but sooner rather than later, the thought process now is that gold is really about to go and make a move, right? Here's the daily chart. This is the highest we've been above the 2011-2012 trend line in ages, right? Well, I mean, in ages ever, right? A lot of people thought we had broken it back here in 2000 or in April, and that failed. And I warned that it would fail because it was the first touch of the median line. Well, now we're back at it. So yes, it can pause, but I don't think it's going to fail this time. This time, I think it's actually going to make a move. That's the thought process, at least my thought process. Okay, and incidentally, the high up here, the high from last year in July, intersects with the 75 line up. I mean, pick your poison. It's it's kind of up there over the rest of the month. So it's a nice spot to look for before you get the next pause in the move. But yeah, bullish gold, generally speaking, does look good. Will says, well, where would you buy? Well, I mean, I wouldn't buy it. I'd already be long, right? And we've written about gold at the times when it was worth getting into it as it came down into these levels. Okay. If really shorter term, I guess, if you're looking for an entry. Again, I'm not much of a breakout guy. Breakouts are prone to failure. I kind of prefer to buy the bigger supports. But let me see if we can do something here on the short term for you. So here's a good one, I think. The angle right here would look good. All right. Okay. Okay, so you see that angle right there, this trend line. Do you see how, for the most part, you get this level, this line, this form of resistance on that, okay? So basically between here and there. So I would say about between 12, call it 1279 and 1282. that's the area at which I'd be looking to be buying, or where I should say, where I would expect any sort of pullback to kind of find support, right? Again, all you're doing here is you're looking at what was former resistance, okay? And you're looking for that to provide support if you test it. It's no different than a horizontal level doing it. Thing is that markets don't trade horizontal levels. They trade on slopes. They trade on angles. So that's why we look at it this way. So 1279 to 1282 or so would be where I would be willing to say that's where gold should find support if it is indeed headed higher in the near term. So I hope that helps with gold. And again, this is kind of fits with the idea that if you dip a little bit in gold, the dollar yen gets resistance up at what we say 110.10, 110 to 110.10, that region. Okay, we have silver, copper, and then we've got to look at euro pound, and then we will and then we'll probably wrap it up. All right, so silver. Silver was very clean early on to me earlier this year, and now gold's a lot cleaner. I mean, sometimes that just happens, right? So sometimes gold, so one or the other will become much more clean. So at least on a slope basis, on a wave basis or an Elliott basis, get rid of that. If we count the drop from up here, 1, 2, 3, 4, 5, 6, 7, 8. Let's see. 1, 2, 3, 4, 5, 6, 7. It's a double zigzag. So we've got 3 waves down, an up wave, and 3 waves down. I am of the mind that you probably have an A, B, C here, right? A, B, C. And that you've made a 5-wave rally up in silver. So in other words, that puts silver at risk for a near-term pullback, probably back to around 17 bucks. So silver is not one that I would be looking to necessarily, trade at this point. While I like the gold levels, silver is a little more confusing to me. So when I have something interesting to say on silver, I'll let you know. I just don't have anything interesting to say on it right now at this moment. Okay, copper, same old, same old. Market's been like stationary for what seems like a very, very long time. But again, looking higher. Had a chart here over the weekend that I thought was interesting. 1, 2, 3, 4. Looking higher in 5. Okay. So again, that's 1, 2, and then this is 1, 2, and then you can see 3, because that's all 1, 2, 3, 4, 5, 3, 4, 5, 3. Pull back 4, look higher 5. Again, an Elliott channeling, draw of waves 1 and 3. Pull back to wave 2. Is it perfect? No. But generally speaking, you get the idea. It's run into it. Now here's the thing with copper. If copper, a lot of head and shoulders talk going on here. I guess if that actually breaks, then that would leave this whole thing as a 3, and that would really ruin the whole idea of copper being bullish, clearly. But every time it's come in here, it's held. Okay, and if I go to a short-term chart, an intraday chart, I can make, a K 1, 2, 3, 4, 5, A, B, C. I can make a case that we're about to really go. So there's not much room for error here, I guess, but here's the volume charts. You can see the high volume week from back in November, right? Market gets below there, but if it was bearish, you would expect it to break that level. It hasn't really been able to do that. It's kind of, it's kind of holds up a little bit. So, we'll see. But my view is positive, okay, on copper. All right, let's go to Euro Pound. So this was the same chart from last week. I was thinking that it was, again, a triangle, and that appears to be the case. I wrote this, I think it was actually like 6-1. So we actually did make a new high, but then we reversed again and we've come right back. So just took a few days, but the idea seems to be correct that we have some sort of a top in place in the near term. Excuse me. For euro, vis the pound, euro against pound. So A, B, C, these are all three-wave movements, right? 3 up, 3 down, 3 up. So I'm looking for a drop here in probably a 618 relationship with wave B, C, with B and D, puts you back towards 84.33. So I'm looking lower in euro pound here. Okay. And then you would allow for a bounce in wave E before a much larger breakdown could take place. Vladimir says a drop there means a sell-off in euro rather than drop in pound. I have no idea. I'm just looking at the chart as it is. I don't like to really assume one or the other. Plus, I could be totally wrong on this. Right? It's just, it is what it is. The chart is the chart. And, my guess, I guess, would be that it would be more pound outperformance. And, if we look at where euro and pound are in their respective positions, you do have, euro, we think it's in like a fourth wave and it's going to be kind of contracting for a little bit, right? So it doesn't mean the euro is going to like tank, but it means the euro could drop, 100 pips from here and just consolidate. Whereas the pound, has already hit support, right? We hit support after the sell-off on in late May. What was that? Right here? Yeah, 526. We held the level that we should have held. Huge freaking level. 2770s, right? Now, if we get back down there, I think it's a buy, right? But generally speaking, we think we're thinking good upside in pounds. So it just may be the pound's a little ahead of euro in terms of its corrective activity or correction or whatever you want to call it, right? All right, where was I? Hope that makes sense, by the way. Okay, For those that, this trading this pound, it looks, to me, it looks lower. Well, you're under 87, basically 87.55, right? I would tell you this, Vladimir, that would make me more inclined, like when I see something like this, right, with what I think is a triangle, and I think that probably the next couple hundred pips in euro pound or lower, it doesn't make me want to sell euro. It just makes me want to participate in pound more than necessarily euro, if that makes sense. So that's how I would look at it. And that's the same as Aussie Kiwi, right? Aussie Kiwi coming into big support, reversing. Again, it seems like it does this all the time, and then we find ourselves back at the bottom of the range somehow. But it makes me think that Aussie is a better buy at this point than Kiwi. Not necessarily that Kiwi is a big sell. So yes, some pound outperformance. Will says, can you have a look at euro and pound crosses? Sure. So here's euro Aussie. We've had charts recently warning of a peak in euro Aussie. Came a little sooner than I thought because I was looking for the trend line, but it does seem to be. Let's see here. Hold on. Lost audio for a second. Euro Aussie. So we've come off a big level as noted. I'd be looking for support probably around 47.80. Bounce, allow basically a three-wave rally to unfold before looking to get bearish. But yeah, it's a good sign that the market has come off of at least from, fairly close to a major level. Again, we had it a little higher. So Euro Aussie is one that I'm not too enamored with. Euro CAD I think is very interesting, right? Because this is actually the chart from the last few days. We've got the weekly chart. We've hit major resistance. And maybe this is one reason why I like dollar CAD short, even though it has just gone straight against me and us, whatever, immediately today. But excuse me, sorry. Yeah, EuroCAD. So at a huge level up here, the weekly reversal level, the median line, the fib, right? 61.80, the entire decline from 2016, just huge stuff. You still have the November high up here, which we came literally like 20 pips shy of hitting. But all in all, really big, important resistance, I think, up here. So if we can turn down and get going on the downside, then maybe there's a trade here. You'll notice that I prefer to trade the dollar crosses, right? And that the non-dollar crosses can kind of guide me. Every once in a while, there will be a non-dollar cross that is a setup too good to pass up. But if you really have to search for it and try, I don't really see the point in risking capital, right? So it's either there or it's not. So while generally I do think that EuroCAD, Euro Aussie are kind of in these positions where they can start to top out a little bit, and we could get, commodity outperformance as opposed to Euro outperformance. I prefer to trade. It's again the passing of the baton. I prefer to trade the commodity currencies to the long side against the dollar rather than try to force, a short euro against them. Pound Aussie. went through the support we had, hit it once, came back. Actually, just hit the yearly opening price, believe it or not. 70.54 is the opening price. Today's low is 70.57. This is interesting. There's a channel here, and that might be something to keep in mind if you were to get back down to that level, 69.20s. Two equal legs. Let's see where that comes in. It would be 69.80. So that gives you a range to look at in pound Aussie is 69.80. One, two, Yeah, interestingly, you do have, this is kind of the right area, I guess. 69.20 to 70.50. This region is one where I think it'd be worth looking at long side in these things, which again, probably to me just speaks to pound outperformance, maybe, right? So maybe the charts are telling us something that the election folks don't know yet. Pound CAD actually had support lower for pound CAD, and still do. So this is the former high. This is from November 2016. It's actually, I guess it's right after the election, 170, 117. And you can see that you've got the trend line in that area. Next week, really, it's actually in next Wednesday, you'd be right there. Okay. So this is pound CAD. So I would mark down that kind of as a big spot to pay attention to at 71.17. 61.8, we've retraced about half of the move here. Looks like two equal legs is 76, and so is 618. So maybe up another 100 pips, and then you might get a drop. We'll see, but yeah, I would just have on pound CAD, I would have this circled or really highlighted 71.20 is good support. It's just the channel, okay? Real good looking channel. Kind of unorthodox, the channel, right? Because the other levels extended off of here. Some may take issue with that, but to me, it tells you that the angle is proper. Look what we did here, and we went to the Brexit level. We went to the Brexit level, pulled back, and that pullback found support above the former high, but the channel's still a bit lower. So if you get another drop for whatever reason, look at pound CAD. It could be a hell of an opportunity. You have a big bottoming pattern really going on over the last year, really since July of last year. All right, I'm going to leave it there. I'm going to get this archived, and I hope everyone has a great rest of your day and week and everything else, and we'll have the swing update out later tonight, as always. All right, thank you very much. Take care. Bye.